All right, so starting off here, chat. Let's start off with the monthly. All right, so starting off with the monthly time frame. Now, the monthly, finally, we have a closure. We have something that we can look forward to, right? I think for the most part of January, every day we're like, oh, chat, it's printing a bottom wick. Can it flip, right? Like we're trying to figure out how it's gonna close. But now that you actually have a closure, I'll say it limits you down to a couple less options than you had prior, which is a good thing because you have more of a direct answer now, right? Or closer to a direct answer as to where the monthly is headed. But as you can see, right, nothing really changed for the monthly. We kind of just closed bearish. However, we closed above this range though. So last month we spoke about how the range we're in was from 1975 to 2150, and we're still in that range, right? Which means that since we're in that range between 2150 to 2000, anything can happen in between. You continue to drive up, come back down to the bottom of the range, come back up, right? It's just a range that we're in, so you have to understand that. However, with the way the monthly candle closed, right, it does show you that with us closing bearish at resistance, that this month's candle, any given point, could come down to fill the wick, right? But what I'll say though is I don't think you'll need that wick, because you know how like usually we'll say, oh yeah, we need a top wick to drive down, because you didn't close below. You closed respecting. Not only did you close respecting this level, right? You closed respecting this candle. So technically, you still have some type of minor support here to the left hand side, right? You're still like the range you can say you're in right now is this pink box here to make things a little more simple. So you have a range within a range. The range within the range is this. This is your range, this pink box here. So this month's candle, I don't know if you need a top wick, because the reason why you want a top wick, right, is only if you were to continue driving down, and that's if you were to continue driving down past that support level at 2000, which it doesn't show you signs that you're going to do so this month just yet, because you would have closed below the range last month, and you would have closed below the range with a strong bearish candle, right? And then this month's candle, sure, top wick to drive down, but that didn't happen. So what that means is any given point you could drive down here, which is if we were going back to what we're talking about yesterday in terms of like different parts of the cycles, right? There's only 3 parts of the cycles. There's a trend, range, and then continuation. So the part of the cycle we're in right now is just like we're starting to form a range, right? But this could just be a bottom wick. So any given point this month, I would expect price to drop down to tap 1975. That's the next part of the cycle, and then after doing so, I would assume that we'll continue to drive up, right? As long as you do this within the next 30 days, as long as you come, or 28 days, sorry, because February has 28 days, but I would assume we'll come down to tap 1975 because we closed bearish last month. But since you closed bearish respecting not only this support, but closing respecting this support as well at 2033, you would assume that the monthly candle will come down, create a bottom wick, and then any given point, that candle could flip bullish. So that doesn't mean you sell now, buy down there. This is a monthly analysis. This is irrelevant to what we're doing today, irrelevant to what we're doing tomorrow. But it's an overall direction as you can, or 29 days, sorry. It's an overall direction as to what you could be paying attention to for the rest of the month. Something that you want to keep in the back of your mind, right? So that's what we're going to do. So for the next 29 days, I'm going to say the same analysis every morning, because this is what the monthly likely is intended to do, right? Obviously, it may not do so, but it's an idea off of probabilities that likely that's what's going to happen, right? So the next step again is if you can come down to fill the wick down to 2000, that'd be great. And then after doing so, maybe halfway through the month, maybe next week, whenever the time comes, if you flip bullish at 2033, you know for a fact that 2033, right, from here we'll have clean range till 2075, and that will be your straight. That'll be the week or the month, or the, I guess you can say week or day, whatever the case is. Once you do flip, that you have a straightforward direction to drive up towards 2075, and then after that, price will make a decision at like 2075 to see where it wants to do, because that's our amount of resistance. But overall, if this is the overall range, then you should continue to fill the rest of the range at 2150 to reach all-time highs, right? So maybe next month it might reach some all-time highs, maybe this month, who knows? But the next step that we got to focus on right now is understanding how you can come down here towards 1975, 2000-ish levels. So that is what we're looking for the monthly, okay? So don't be surprised if, you know, for the rest of the month, that's why I repeat, because that's what we did for last month. The weekly here, this is where things get a little interesting, and you can start to connect the dots, connect different chapters to a story. But if the first chapter of a story tells you that the monthly candle, the next step is to drive down towards 1994, 2000 levels, look at the weekly. You have a day and 9 hours left. Tomorrow's NFP. What can happen today? What can happen this week? The weekly we had on Monday, right? Because the weekly is still the same week as last month. But Monday, when we came to the charts, we said how this week you are expecting to create a top wick before ripping down. That's what we said. And that's currently what's being formed. So the question now becomes, is there enough time in a day, because tomorrow's Friday, right, before the end of the week to drive down, right? If so, then what I assume would happen is this. If you can come up, create a top wick, which you did, right? If you flip bullish today or this week, then likely what's gonna happen is you're gonna come down, tap that next target that we had in mind. And the next target we had in mind for the weekly was, I believe, 2005, which was right here, right? This support being formed right here. So we're expecting this weekly to do exactly what is being formed right now. It's just, you know, right now you're in the process of printing the top wick. We're gonna drop down to a small time from the daily and such to find ways where we can likely drive down towards the bottom of the range. But this part of the chapter shows that, you know, you are printing a top wick, and at any given point you could flip, right? This is a pretty decent rejection after the top was being formed. So can you flip bearish to drive down is the question, right? So that's what we're trying to that's what we're trying to focus on right now in terms of the weekly. So the monthly focus was whatever, right? But this is the weekly focus now. Now let's drop down to daily and figure out how the daily makes sense with the weekly, that makes sense with the monthly. Drop it down to daily. So here's when things might get a little tricky. And by the way, this is the first time looking at all of the time frames right now today. So whatever I'm saying right now is basically for the first time. The daily looks like you have 8 hours and 43 minutes left for a closure. And it looks like the first half of the day was basically coming up to print the top wick, if that's what I'm assuming, right? And then price is starting to push down now. So my only concern here really is that the daily didn't really close below the range. It didn't really close respecting resistance. It kind of closed above, if anything, right? So if I draw a level right around here, you're gonna see it. You closed above here on, I think it was Wednesday or Monday. What day was that? Monday? You closed above on Monday, right? So oh yeah, Monday, the PTSD day. But yeah, you closed above on Monday, which means that, you know, looking left, you did have at one point clean traffic to drive up, which you did come up towards, right? There's no top wick here. You came up to fill that range, clean traffic, great. And now price started to reject. Now, the only problem that we had on Monday, I'm not sure if you guys recall this, but on Monday we said how there's no bottom wick on the daily, right? And I would assume that before price makes its way up towards the daily target or towards the next daily resistance, right, you will need to grab liquidity at some point, because if you don't grab liquidity any given point after pushing up, you can still come back down. And that's what's happening right now, because you were waiting initially for a bottom wick around these areas to the left here, right here, and like maybe like down here even. That never happened, but you still pushed up, right? But if we're coming down now, could that mean at any given point today you can close back into the range to continue driving down tomorrow? Because tomorrow will be the weekly flip. You know what I'm trying to say, right? Because like, look, we spent the first half of the day coming up for a top wick, and then you're starting to shift down, and you're starting to re-break the lows on the current day low. So it really comes down to the next 4 hour candles that close, which is in about 45 minutes here, and we'll drop down to that time frame to see what's up. But looking at price here, it does show you that you're starting to come down to re-break the lows. So could this mean that you're coming down to grab liquidity? Because at the end of the day, we're still bullish, and we can still close bullish above the range after grabbing a bottom wick for all I know. But if we're coming down to re-break the lows, could we anticipate price to come down to create a bottom wick, right? Again, we don't know if we're going to close below or not, but what we do understand here is if the daily is coming down already, then that could mean that we're grabbing liquidity, right? Which means that the next step is to come down towards 2020. Now, the only thing is we had to confirm that. We had to confirm that using the small time frame. So let's go ahead and do that. But just a little recap here before you guys get lost here. The monthly, we were expecting price to come down, right? Because that is the next step of the monthly. You have a bearish candle, you're expecting price to come down to fill the bottom of the range, but since you're still respecting support, you can still flip at any given point. If that's where you're assuming would happen on the monthly, drop it down to a weekly, it makes perfect sense because the weekly still has a flip. And if the weekly flips at 2017, then could that mean that the weekly would come down, tap its target at 2007, right? 2007, 2005 levels in that range there. So if you go down to 2017, I'm pretty sure 2017 is the daily bottom wick. What a coincidence, right? That's why I said we'll come down towards today on the daily. If the daily shows you signs that this is coming down for that bottom wick, can it finally tap 2017? And guess what? It goes back full circle. When you tap 2017, that would be the weekly flip. and that'll lead to the monthly coming down to fill the wick as well, right? Because the weekly, if the weekly comes down to that green line, that's 2017, this is what's going to happen. And if the weekly flips bearish, there's nowhere else to go but the bottom of the range at 2005, which means that this would be the candle, and you'll come down towards that white line, which is our target. And going back to the white line on the monthly, where's the white line on the monthly? The monthly wick fill. So you see how like it's like a little story from like, let's say this is like chapter 1, the weekly is a chapter 2, the daily is a chapter 3. It kind of all lines up here. So now the hard part is trying to figure out whether or not this support at 2030 is in respect or not, because that's all it comes down to. So let's go ahead and do that. The 4-hour closure is in 29 minutes here. What we understand right now is that you have a candle that has no top wick. That's the first thing I noticed here. No top wick on this candle, right? Which means at any given point, this thing right here could flip bullish and drive up at any given point, unless it closes bearish in about 39 minutes here, which is a lot of time. And you have news here at 8:30 as well. So if this is your support sitting right here on price at 2038, right? Any given point, this thing could flip, which means that any given point at the end of the 4-hour candle in about 30 minutes here, this can happen. This is a scenario. This is a possible scenario, right? So keep that in the back of your mind. However, if you continue to break the lows and the 1-hour starts to create top wicks and the 30-minute starts to create structure and the 15 starts to create structure, which will drop down to in a second and check out, then that's an indication that we're going to continue to push down. So just like yesterday, right? So right now, the hardest part today is trying to figure out whether or not you're going to flip bullish or not, or if you're going to come up to grab a steeper top wick on the next 4-hour candle or not. That's the hardest part of the day, but you can adapt to that, right? So if price doesn't do so and the small top starts to show signs that, okay, there's a resistance here, there's a top wick tapping price into these levels here, right? Then sure, that's an indication that you can take sells down without needing to wait for a top wick, right? So that's what we're going to do here in a second. But you know, with the way the 4-hour candle close here, chat, you can kind of see, right? You're closing respecting the support still to the left-hand side, which means at any given point you can still flip. But your next support coming down, if you were to continue down, is looking like it's going to be around these ranges to the left at 2024, because that's the bottom of the range, right? You can kind of see. Well, let's actually make sure that's the exact level, but I'm pretty sure it's within this range here. I'm basing that off of these rejections here, rejections here, rejections here, rejections here, rejections down here, rejections here. Yeah, I guess you can say 2028 is like your next overall target if you were to continue pushing down here until the 4-hour candle closes. The 1-hour here, the new ADM candle, you can kind of see the last 2 candles have all closed bullish, right? But if you look left real quick, they all closed bullish respecting this resistance, which is a sign that any given point, right, since you're still respecting, you could push up, right? Because you have bullish candles here, but at any given point, since you're still respecting, you can push up but still reject. So that's what I'm going to wait for. And this is where things start to click in my head for me, because if it shows you that, okay, 2034 is a heavy resistance, you have 2 bullish candles, right? What you would expect is for price to drive up after flipping bullish. This is what you want. However, if you come up and that's a top wick, right, and then you flip bearish, this is how it's gonna look. Which means what, chat? What I said earlier. If the hardest part of the day is trying to figure out whether or not the 4-hour candle is gonna drop down or not, if you come up on the 1-hour candle here to break all the highs, and then you re-break the lows after breaking all these highs, and you flip bearish, this right here is your confirmation right then and there that that's the 4-hour candle top wick for us to rip down, and therefore you're gonna drop down towards the next 4-hour support or the next daily support. That right there would be your confirmation. So that's what we're gonna wait for likely. So now the next step is really waiting for that top wick, right, to break the highs. It doesn't have to tap 39, 41, whatever the case is. It can just tap, I'll say, into like this level here, 38, maybe 37, right? But the higher the better would be. But if you can tap into those levels there and then you flip bearish at 2034, we can grab sells during this 1-hour candle to drive down, because your next support shows you that it's sitting at, I believe you're looking at 2028, right? What was the target on the 4-hour time frame? 2029-ish, 2029.046. So you can say if you were to do that, you can probably grab sells from 34 down to 29, and that's your position for the day. So that would be the story of the day, I would say. The hardest part is just trying to figure out whether or not this 4 count is going to flip in the next 40 minutes or not, because it's still respect and support. But if you come up for a top wick, right, this is how the 4 count is going to look. It's going to, at some given point, look like it's going to reject. So it's going to look like this. It's going to have a huge bottom wick, right? But if it does that and then it comes back down on the 1 hour candle, that's an indication that's going to drop all the way down towards the next support at 2029, 0.046, and that will be the move of the day that we'll grab. After 9 a.m., that might change, you know, that might shift, that might be different, but at the time being, that's what I'll say is what I'm waiting for next. And if that doesn't form, then we'll wait for the 9 a.m. closure, and we'll wait for another setup with the 4 hour candle closure, and then we'll have more opportunities.